Hey everyone, welcome back to Nim's Adventures to Financial Freedom. Today, I'm thrilled to share with you a bold and unconventional strategy that's at the heart of my plan to retire in just 2 years. Imagine achieving financial freedom faster than you ever thought possible. Let me show you how I'm making it happen. So, why am I aiming to retire early? Well, I'm almost 41 years old, and despite having a stable job, I've found that the work doesn't truly fulfill me or ignite my passions. I started to feel like I was trading precious time for a paycheck, missing out on moments and experiences that truly matter. Continuing down the traditional path would mean many more years before I could fully dedicate myself to my family, explore my interests, and live life on my own terms. I knew there had to be a better way. Determined to change my future, I knew I needed to think outside the box. I asked myself, how can I accelerate my wealth accumulation without waiting decades to retire? That's when I discovered YieldMax and their high-yield ETFs. Like many, I was initially skeptical. Could these high yields really be sustainable? But after watching them deliver consistent, impressive dividends month after month, my skepticism turned into excitement. I vividly remember receiving that first dividend payment. It was a powerful moment of validation that proved this unconventional approach could truly work. That experience ignited my commitment to fully embrace and refine this strategy. Seeing the consistent performance of these ETFs, I decided to take a well-calculated risk, leveraging loans to maximize my investment potential. The concept is simple yet powerful. Borrow money at a manageable interest rate and invest it in assets that offer significantly higher yields. The beauty of this strategy is that the dividends generated not only cover the loan payments, both interest and principal, but also pave the way for additional income growth. This approach allows me to accelerate wealth accumulation without heavily relying on my existing savings. Let me break it down for you. Starting in July 2023, I strategically secured multiple loans totaling $104,000, with an average interest rate of 7% and repayment terms stretching up to 6 years. A major advantage here is the flexibility to repay these loans early if circumstances allow. Each month, the dividends from my investments have fully covered the loan payments, including both interest and principal. But let's consider a less favorable scenario. What if, over 6 years, the value of these investments drops by 50%? How would that impact the overall outcome? Even if, over time, the investment experiences a negative yield, let's say a 50% decrease in value, assuming it doesn't drop to zero, the strategy still holds strong. Throughout the 6 years, the dividends have consistently covered all my loan payments, meaning I haven't spent any of my own money servicing the debt. At the end of this period, despite the downturn, I would still own assets worth approximately $52,000. Essentially, I've built substantial equity without any out-of-pocket expenses, showcasing the resilience and effectiveness of leveraged investing when managed carefully. Because my out-of-pocket cost was $0, and I'm left with $52,000, the effective yield is exceptionally positive. In fact, you could argue that the yield is theoretically infinite, since I didn't invest any of my own money. Yet I still ended up with a valuable asset. This effective yield is a testament to the power of leveraging wisely. Now let's talk about how this strategy is helping me reach my ultimate goal. By reinvesting the dividends and consistently adding a portion of my salary each month, I'm on track to achieve my goal of $10,000 in passive income per month by November 2026. Reaching this milestone will enable me to retire early, pursue my passions, and fully enjoy the life I've always envisioned. This approach isn't without its risks. Leveraging borrowed money requires a deep understanding of the stock market, careful stock selection, and a solid financial management plan. The first risk is the potential for interest rates to rise, which would lead to higher loan payments. However, given the current economic climate, it's more likely that the Fed will cut rates in the upcoming meeting, reducing the likelihood of this scenario. Another risk is the variability of dividends, especially since these are derived from covered call strategies, a technique where options are sold against held stocks to generate income, which can be highly dependent on market volatility. This means dividends can fluctuate from month to month, and there's a possibility that they could fall below the loan payments, something that must be carefully considered. Lastly, there's the theoretical risk of the ETF or stock going to zero. While I believe the chances of this are low, it's still a factor worth keeping in mind. To mitigate these risks, I'm building a diversified dividend portfolio designed to cover any shortfall in the leveraged portfolio's loan payments. Additionally, I have my salary and some savings as a backup. Once I'm close to reaching my goal, my plan is to accelerate loan repayments by channeling excess dividends and a portion of my salary, aiming to clear the debt well ahead of retirement. This approach will not only reduce risks, but also bring me closer to financial freedom even sooner. For over a year now, I've been successfully implementing this strategy, with dividends consistently covering my loan payments every single month. In my detailed monthly videos, I'll keep you updated on this journey and my loan status, offering an inside look at how the strategy is evolving. You'll see firsthand how I'm navigating the risks and rewards, and the valuable lessons I'm learning along the way. To stay organized and closely monitor my progress, I rely on Snowball Analytics to seamlessly track all my portfolios in one place. It highlights my passive income alongside my net worth, keeps me updated on top gainers and losers, and even shows when my next payment will land. The holdings page offers a breakdown of total profit for each asset and in-depth performance analytics. With these tools, plus a vibrant community of investors, Snowball makes my investing journey smooth and efficient. You can register for free using the link below. And if you're already using Snowball Analytics and want a discount on premium features, use the promo code for a 10% discount. If you're as excited as I am to see how this strategy unfolds, be sure to subscribe and hit the bell so you can join me on this journey every step of the way. And as always, drop any questions or suggestions in the comments below. I'd love to hear from you. Thanks for watching, and I'll see you next time on Nim's Adventures to Financial Freedom.